Well, TD Economics has just released their latest provincial forecast on everything from inflation to unemployment rates and the strength of the economy. Let's go through some of those highlights with Leslie Preston, who is a managing director and senior economist with TD Bank Group. And Leslie, welcome to the show. Thanks for joining us.
Thanks very much for having me.
Okay, so we've got a lot to get to. Let's take a look at the unemployment rate outlook right now.
Yeah, well, Canada's unemployment rate has already risen a fair bit over the past couple of years, and we are expecting it to rise a little bit further from here. It was at 7.1% in August, and our forecast sees it rise to 7.3% by the end of the year as those trade uncertainties and weak demand from the U.S. for Canada's exports weighs on employment through the second half of the year.
Okay, let's talk about inflation. What's your outlook there?
The outlook for inflation is actually pretty steady. If you look at Canadian inflation on a headline basis, it's right around the Bank of Canada's 2% target. Of course, that's actually being held back by the elimination of the consumer carbon tax in the spring. If we look at the Bank of Canada's core measures, inflation has been running closer to 3%, which had been concerning the Bank of Canada. But in terms of the outlook, we expect that the removal of the retaliatory tariffs on the U.S. and softer growth in the Canadian economy are going to keep that core inflation measure heading back towards 2%. So we really have inflation sort of running around the 2% target over the next couple of years.
Now, we did see the second quarter GDP contract. What's your outlook, or what are the chances of a potential recession here in Canada?
Yeah, well, I think a really good way to illustrate this is actually to look at a chart that I brought along with me, which shows how GDP growth has fared relative to our expectation only a few months ago. Now, this is in halves of the year rather than the quarter, but you can see in the first half of the year, growth came in about as we had expected. However, in the second half of the year, we are now expecting modest growth as opposed to the overall contraction we were expecting before. So Canada's economy, as we saw in that second quarter GDP number, has really been quite a bit more resilient than we economists had feared earlier in the year.
All right. Of course, we had central bank cuts from both the Bank of Canada and the Federal Reserve last week. What is TD Economics expecting for the next meeting happening in October?
We're looking for 25 basis point cuts from both central banks. They have matching dates again in October on the 29th. From the Bank of Canada, we are expecting that to be the last rate cut this cycle. That would take the overnight rate to 2.25%, where we expect it to stay. The Bank of Canada is quite a bit ahead of the Fed in terms of easing monetary policy. For the Federal Reserve, we're looking for a 25 basis point cut in October and then another cut at their next meeting in December. And we expect the Federal Reserve to cut further in 2026 till they get to, we estimate, as their sort of terminal rate of 3.25% next year.
So given those cuts, what's your view of the Canada's economic growth or prospects overall?
We have a fairly modest growth outlook for Canada. Of course, Canada has been hit hard by the U.S. tariffs. We are seeing weakness in exports, weakness in Canada's manufacturing sector. Of course, what's been nice to see is sort of a textbook monetary policy in action. The Bank of Canada, started lowering rates last year, has continued along that track this year, and we're seeing consumers and even the housing market start to come back. So that has helped Canada's economy prove more resilient than we'd feared. But overall, modest growth of just above 1% this year and into next year. And
are certain provinces being hit, more than other provinces? What's your outlook on the provincial growth across the country?
Absolutely. We are seeing a diversity of growth, and a picture is worth 1,000 words from me here. So we have a nice little map showing this is economic growth or GDP growth forecasts by province across the country. And what I would highlight here is that the center of the country, where there's the most manufacturing and ties to the United States, is where we're expecting to see the more modest pace of growth.
We've been impacted a lot more than other provinces from those tariffs.
Absolutely. Ontario, Quebec, New Brunswick, Manitoba, if you on the map there showing growth of around 1%, whereas, provinces like Newfoundland and Alberta, the more commodity heavy provinces have been doing relatively better. And what we expect for 2025. So definitely different stories depending on where you are in the country.
And what about some of the economic growth or economic projects that the Prime Minister Mark Carney is looking to build out across Canada? What impact could that have on our economic growth going forward?
Well, we're really highly anticipating the November 4th federal budget because, we have a good sense of, as you mentioned, what this government's priorities are, those major projects, also, the ramp up in defense spending that we're expecting to see, but we don't know the details. So in terms of what the impact is, how much of these major projects is the goal to, facilitate them with a quicker approval versus actual, money? And we really need to see the details on that in the budget to get a sort of a clearer picture of how to work this into our economic forecast.